A golden bait hung temptingly out before the people, and one after the other they rushed to the tulip marts. Like flies around a honeypot, nobles, citizens, farmers, mechanics, seamen, footmen, maidservants, even chimney sweeps and old clotheswomen dabbled in tulips. When the tulip bubble suddenly burst in 1637, many who for a brief season had emerged from the humbler walks of life were cast back into their original obscurity. Substantial merchants were reduced almost to beggary, and many a representative of a noble line saw the fortunes of his house ruined beyond redemption. Join me in today's video as we talk about an important concept in the world of Web 3.0, the difference between investing and speculating. Hey guys, welcome back to the channel. Today I'm going to discuss the difference between investing and speculating and why this matters to Web 3.0. If you like the content of these videos, don't be shy to hit subscribe. Tulip mania is often cited as a classic example of a financial bubble, and if you believe the stories, probably the earliest instance of a financial bubble. In a financial bubble, the price of something goes up and up and up, not because its intrinsic value is increasing, but because people are buying it with a view that they can sell it to somebody else for a profit later on. It may seem foolish to pay $1 million for a tulip bulb, but if you believe that you could sell that tulip bulb for $2 million later on, then it may be actually quite a rational investment decision. This is known as the greater fool theory. And the greater fool theory simply says, it doesn't matter what the price you pay for something is, because you depend on the fact that there's going to be a greater fool out there who's going to pay more for it than you did. Now, the greater fool theory is by no means a long-term investment strategy. It is in fact a very risky speculative strategy. While speculation from the greater fool theory can make you lots and lots of money, you must remember that it relies on one critical fact, that at the end of the day, you aren't the greatest fool. Let's take a look at one more example of a speculative bubble, the dot-com boom and bust of the 90s. At the time, the increasing popularity of the internet triggered a massive speculative wave around new business ideas and economies based on the internet. As a result, hundreds of dot-com companies listed and achieved multi-billion-dollar valuations. The Nasdaq Composite Index, which is home to most of these dot-com companies, went from a value of 750 in the early 90s to a value in excess of 5,000 by March 2000. The index crashed shortly afterwards, plunging 78% by October 2002, triggering a US recession. Compared to speculating, investing involves understanding the intrinsic value of what makes an asset valuable and understanding the fundamental drivers that would make an asset more or less valuable. Let's try and explain this with a simple example. Everybody is familiar with the company Amazon. You've bought things from Amazon, I've bought things from Amazon. If I was thinking about investing in Amazon, I would want to understand what are the things or the factors that make Amazon have some value. What would make it a valuable company for me to invest in? And what would cause that value to go up over time? To understand that, I would have to understand what are the intrinsic drivers of Amazon's business model. To understand that, I would have to understand what are the key things that are going to make Amazon more valuable as a company. Now, let me give you a few examples of this. Firstly, I know that Amazon sells products online. So one of the key components of their business is e-commerce. So I'd want to know, how is the e-commerce business doing? How is it doing for Amazon? How is e-commerce generally doing in the world? And what's happening with the revenues that Amazon is generating from e-commerce? Are they going up and down? Are they going sideways? I would want to understand the dynamics of this. Secondly, every time I'm surfing on the Amazon website, I'm seeing ads, and I'm sure you are too. So I know for a fact that Amazon generates quite a bit of its revenue from ads or advertising. So I want to know what the trends in this are. Are advertising revenues going up? Are they acquiring more customers? Are they able to charge more for advertising? All of these things would tell me whether Amazon is likely to generate more or less revenue from advertising in future. Thirdly, I know that cloud computing is becoming a bigger and bigger deal in the world today. And I know that Amazon has one of the better products out there for cloud computing in Amazon Web Services. So things that I might want to understand here are more businesses using Amazon Web Services? Is it becoming more competitive relative to some of its big competitors out there? And what is the likely trend going to be in the revenues that Amazon generates from Amazon Web Services? Understanding these factors might help me decide if I think Amazon is going to become a more valuable company in the long term, and if I want to invest in them. And if I did invest in Amazon, I would invest and I wouldn't worry too much about the fluctuations in the price in the short and medium term, but rather hold on for the long term because I believe in the fundamental drivers that are going to make my investment in the company more valuable over time. The most important things to note here is that I'm not putting my hopes on there being a greater fool than me out there at some point in time. So, what has this all got to do with Web 3.0? There are many people out there who would argue that cryptocurrencies are in a financial bubble. And you don't have to look further than the price swings of some of the major cryptocurrencies out there in the last few years to understand why people would be saying this. In fact, one could consider something like Dogecoin, which started out as a joke, but ultimately saw its price move 200% in one day and almost 600% over the course of 1 week, and ultimately had a public endorsement from Elon Musk, who at some point admitted that Tesla holds Dogecoin on its balance sheet. The Bank of England Governor Andrew Bailey has said on many occasions that cryptocurrencies have no intrinsic value, and that if you buy cryptocurrencies, you should be prepared to lose all the money if you have spent buying them. Now, the point of this video is not to encourage or discourage you from buying cryptocurrencies, but is simply to make the point that you should be very clear on whether you are buying cryptocurrencies with a view to having a greater fool out there, in other words, speculating, or whether you are buying cryptocurrencies because you believe in the intrinsic value that they hold and that you understand the clear drivers that should make them more valuable over time. So are you speculating or are you making long-term investment decisions? What I can say for sure is that the Web3 landscape, whether you talk about NFTs, cryptocurrencies, or decentralized finance protocols, is rife with speculation. At the same time, there's a lot about the Web3 landscape and what it could mean for the future of the internet and the future of the world that means that there could be a lot of intrinsic value in some of the technologies that we are developing in the space today. Whatever you're doing out there, be clear on understanding whether you are speculating and depending on there being a greater fool than you, or whether you are making long-term investment decisions and understanding the drivers of intrinsic value of what you are buying. Thanks for watching. If you've enjoyed the video, please do subscribe to the channel. I'm Nelson. This is the Nurse Verse. See you next time.